What's up, everybody, and welcome back to the Junior Markets YouTube page. If you're tuning in from YouTube, make sure to check out my website, Junior Markets. It's linked in our YouTube description, and we go over all of this stuff and more. If you're tuning in from the website, this should be on the Stock of the Day tab. And just like I just said, today we'll be going over the Stock of the Day. And as you can see, the Stock of the Day today is Sanofi. So the way I like to do this, like previous videos, is I'll go over the business description, some dividends, some metrics, uh, and then where I think an opportunity lies. So with that being said, let's jump right in. So jumping right in, let's get started with the business description. So Sonify develops and markets a wide range of drugs. They focus on oncology, cardiovascular disease, vaccines, and the company has a very broad portfolio when it comes to drugs, but Dupixent, this drug right here, accounts for just over 20% of total sales, which is something to keep an eye on. And then approximately 40% of Sonify's revenue comes from the United States, 25% from Europe, and a majority from emerging markets. So that is something we like to see because the US and Europe have pretty stable economies. So now let's hop on over onto Charles Schwab's website and look at some metrics and some of the company profile over here. So as you can see, it's currently trading at 47.24. It is down today. And if we look at the chart over the year to date, we can see that it's down about 5%. And then looking at it, 3-year chart, it's down about 11%. I did put this chart on my website. If we look over here at the market cap, we can see it's about $120 billion, which is a large cap stock. And we're looking at about 10% of shares held by the institution, which is a good number. We like to see a lot of those insiders having shares in their company. And then number of shares short, not a lot of short interest, which is something that we like to see. And then we'll hit dividends later. So let's head down into company comparisons. So first off, something you need to look at when it comes to pharmaceutical companies is return on assets, return on invested capital. And I highlighted this in my website as well in the final thoughts. But these pharmaceutical companies have to spend billions of dollars on research and development, coming up with new drugs, because once you come up with a new drug, you only get 20 years with your patent before other companies can start making generic versions and their own versions. So you get 20 years of a monopoly with that drug. So these companies are spending billions of dollars trying to come up with new drugs that they can bring to the market. So it's really important to make sure that companies are getting back more than they put in. So we're going to head over to return on assets. Here it is. Return on assets, return on equity, return. So I hopped on over to Morningstar's website because, as you saw on Charles Schwab's website, they didn't have the numbers, but you can look at some of the company competitors' numbers and compare them to uh, Sonify's numbers. So if we look at return on assets, it was 4.5% back in 2014, and then if we look at it now, it's about 4.27. So they've had pretty consistent return on assets, probably averaging at about 6, which is okay. If we go look at the other companies' numbers, it's above their competitors, so that's fine. Return on equity is about the same. It's been pretty consistent, a few outliers, but otherwise stays around the same range. And just like ROA, it is in line or a little bit better than competitors. And then if we look on return on invested capital, that is also kind of all over the place, a little sporadic, which we would like to see these numbers getting better over time. We don't really want to see them kind of jumping all over the place, which sometimes happens with these companies because patents run out of time, new patents are gained, and so these numbers can be kind of skewed year over year. But we would like to see these numbers improving. And then if we head down into some of their margins, their operating margin kind of hangs around 20 for the past 10 years. which isn't bad. It's better than most of their competitors, but we would like to see this number improving over time, not just hanging in one spot. And then if we go back up to the top, we can look at revenue and gross profit. So when it comes to revenue, the revenue, just like some of their other metrics, is pretty sporadic all over the place. Sometimes they'll have 16% growth, so like we see here. Sometimes it's negative growth, um, which is something that we don't really want to see. We want to see more consistent growth. But as long as they're increasing their revenue over time, it's not too much to worry about, which over the past 10 years, they have brought up about $12 billion. So that's not horrible. And then if we look at their profit is gaining about 68, 67% every year. Their operating income, if we look at that right here, is going up about, I'd say, an average of 23%, maybe lower at 22%. But it has increased about $2 billion. This peaked during 2022 because one of the top selling drugs that they had was a COVID vaccine. And then if you go into my website, one of the things I highlight is they're working with another company on a COVID and flu vaccine. So be on the lookout for that. They said they would start releasing some info into 2025. So I put that into the trading notes because I think that if this company gets something like that to work, this could be a huge gainer going into the future. But getting back into this, their operating income is going up over time. And now we're going to head back over onto my website and I'm going to go over some other opportunities. So I laid out the opportunities here, and so you can read through these. Just gonna quickly gonna skim over it. So like I said earlier, they're working with another company on a COVID flu vaccination combination. The company is Novavax, but like I said, it's in early stages. Um, and then moving on, they said that they have a wide lineup of branded drugs and vaccines. If you go on to Charles Schwab's website or onto Sanofi's website and look up their drugs, they have pretty much everything from the common cold to diabetes to the flu to COVID, pretty much anything you can imagine this company provides. And then getting down into here, like I said earlier, when it comes to pharma companies, patents are very important because patents will protect the drugs that you spend so much on R&D for up to 20 years. And so the patents they have strong pricing power because they have a lot of patents on a wide variety of drugs. And then they're funding nearly $1 billion on development costs. So this is something that we like to see because they have to keep up with all of their competitors. Now, if we head down, let's just quickly look at management for a little bit. So their CEO, Paul Hudson, he's been with the company for about 5 years. And then before that, he was with some other pharmaceutical companies. And then if we look at other roles in their board of directors, we can see that they have a lot of experience with other pharma companies. And now I'm going to head back over to Charles Schwab's website to hit dividends. So here we are, and let's go over dividends. So dividends have been a little shaky. As you can see, the growth here is kind of all over the place, sometimes ranging from staying the same year over year to going up about 10%. It went up 13% in 1 year, up 6%, down 7%. So these dividends are kind of all over the place. Right now, their dividend, as we can see here, is about $2. The dividend yield is about 4.4%. Now, if you do go watch my Choosing Dividend Stocks YouTube video, I go over how to choose dividend stocks, and this would be a perfect example because they have a good yield and a good dividend, but the company is down and their dividend's kind of all over the place. If you're looking for a good dividend stock, I would not necessarily recommend this. There are better options. But if you're looking for a stock with a lot of upward potential over the next few years, then this stock could be something you could take more of a look at. Now, if we head back for just a second, let's head down into earnings. And I believe this will show me, yes. So if we look at earnings per share, it's kind of like everything else with this company. It's been all over the place. They've had good years, they've had bad years. And then if we head down into their revenues, like we saw over on Morningstar, all over the place. Their cash flow, their cash flow honestly is pretty consistent over on Morningstar's website. And what I highlighted on my website is for the past 3 years, they've gotten more than $10 billion in operating cash flows. So that's something that we like to see because they only have a little bit more than that in debt. So they have a pretty low debt number. So this company is doing pretty well when it comes to managing their assets and managing their debt according to their cash flows. So now we're over here on MarketBeat, and as we can see, current institutional ownership about 10%. The number of institutional buyers is 389. Number of sellers is about 281, so pretty similar numbers. But one thing I wanted to look at was head down here into the Q1 of 2024. So as you can see, there's 333 million shares bought, or worth of shares bought, but only 24 million sold. And last time there was this big of a difference, you can go look at the performance chart. The stock rose, I think it was about $5 or $10. So that is something to keep an eye out for, is when people inside the business are buying shares in bulk. So now to finish it off, let's look at some fair values. So Morningstar's fair value was about $61, which is a 29% increase. And then Refinitiv, which I get off of Charles Schwab's website, maintained a price target of about 59.12, which is a 27% increase from the current market price of 47.24. And so there is, off of these two, about a 28% upside. So now let me just go into kind of sum up this video and why I think this company might be something to look into if you want a little bit of a growth company that might be a little more volatile. I think the PE right now is about 23, so not horrible, but a little high. But with a company like this, who, like I said, they spend about $1 billion on R&D, um, because those patents only give about a 20-year timetable. This company has pretty good patents. They have a very well diversified portfolio of drugs. Like I mentioned up here, they have pretty much everything: cardiovascular disease, oncology, vaccines, diabetes. They have things for the common cold. They're working with other companies on making drugs for the flu. So this company kind of ticks off all the boxes. But then if you look at their metrics, their ROA, ROE, ROIC, they're all a little shaky. So that's something to keep an eye on. That's definitely something that could be better. But their cash flow, for their operating cash flow, is pretty great. And with their multitude of drug offerings and that stable cash flow, that kind of offsets some of these bad metrics as long as they can keep those cash flows good. And then just just to finish it off, this company's kind of been hammered the last few years. If we go back up to this chart, um, they are down about 11% over the past 3 years. So this might be a good company to add to your portfolio. I do like this price. It's been on the down the past few weeks, so you might not want to catch it on this down spurt. But overall, I do like this company at its current price, and I like where it could go in the next few years with its patents and with its profits. Just keep in mind, all of this stuff is speculative, and it could not turn out the way that we think, and it could go all down um, their projects could not work out. They could spend billions of R&D money and nothing come out of it. So this is a little bit risky, but if you're more into the risk business, then this might be something you should more look into. That is it for this video. Thank you so much for watching. Make sure to check out Junior Markets on all of these platforms, and have a great day.